Good morning, everybody. Welcome to another weekly general update for the 11th and 12th of August. And whilst we've seen the US market heading higher over the last couple of months, there's only been a small section of the Australian market that has been going up, and that's really been the banks and the telecommunication stocks. But finally last week, particularly in the last couple of days, we've finally seen a more general response from the Australian market. And that's opening up quite a few good trading possibilities at the moment. So I think we finally are seeing a turning point in the Australian market, and one that we can trade with a little more opportunity. So just a quick reminder, this is general advice only. We haven't obviously taken account of your personal circumstances in putting this information together. So a bit of a summary of the market action. The S&P on the week just steadily worked its way higher and ended up gaining 15 points and closed a little bit higher each session. So there's just good, strong underlying momentum all the time. And when it's just going ahead by a few points each session, it's likely to be a bit more sustainable than when we get these massive moves up or down, which tend to then reverse pretty quickly. So I'm looking at 1422 as the first target. I'm expecting a pullback in the next week or so because it's gone up a fair bit. And if you look at the when we get to the charts, you'll see that it doesn't, in terms of number of days, doesn't really go up too much more than what we've seen so far. So I expect to see a bit of a pullback in the next week or so. It'll probably be sharp because that seems to be the way that markets are now. Once they turn, the initial move can be quite sharp. But I would expect it to be, in general, pretty mild and pretty shallow. Now the ASX index ended up gaining 56 points on the week, which was a little bit better than the US market. And that was mainly because BHP and Rio and a couple of the other resource stocks have now started contributing to the index. And it was obvious in the last few days that certainly many larger resource stocks did reverse. So from here on in, I believe the approach is very much buying the dips. We were looking to short sell the rallies, but I think buying the dips is definitely going to be the way to go for the immediate future. Now the US dollar index looks to be heading down to either 81.5 or possibly 78.5. So it just depends on how things are perceived, particularly in Europe. And as a consequence, the euro probably targeting 126, just a little under 128 or 129.5. And we looked at those levels last week, but we'll take another quick look this week. Bond yields, despite the better sentiment with respect to Europe, Spanish 10-year bond yields are still close to 7%. That's 6.9. So I would have expected those to have come down a little bit further than what they have. So let's have a look at those couple of charts. So we'll start with the euro first of all. And we've been looking at this chart for a while now. So we've got a very clear and definite downtrending channel in the euro. It's sitting around about the middle of that range at the moment, but the direction to me seems to be up. We're forming higher highs and higher lows, so I would expect that we'll probably have a run at 126 and possibly higher depending on the momentum. Now as a consequence of that, the US dollar index, we have this little false break here in late July. It's come back into the range. We've gone back up, we've retested the resistance, and now we're dropping away again, so it's highly likely we're going to see the US dollar index go to the bottom of the range, which would get put at about 81.50, or it's possible we could even move down to this level down here as well. Is another possibility around about the 78.5 area. So that will very much determine what happens to stock markets. Let's have a look at the S&P. You can see here we had our low point on the 4th of June. Since then it's been higher highs and higher lows. Really looked like it was running out of gas a couple of weeks ago and starting to roll over, but that got turned on its head by central bank action. They seem absolutely determined they are not going to let stock markets go down and financial markets to languish. Excuse me. Now you can see here we've had 6 sessions higher in a row, and just steadily working its way towards this 1422 mark. Now one of the things that we've seen of late over the last couple of years is that there is a greater incidence of false breaks of resistance, so I wouldn't be at all surprised to see the S&P, if it does get up to that 1422 level, maybe just go another 15-20 points beyond that, create a little false break, sucker a lot of people into the market, and then probably get a more significant correction of this run that started in the 4th of June. But overall, my view is that we'll probably be higher by the end of the year than where we are now, and I think the approach from here is with still some caution, but basically buying the dips I think is appears to be the way to go for the time being. So have a look at the Australian market, and we had a little bit of a sell-off on Friday. The banks being sold down a little bit. Just look at the individual indices. This is the energy index. It's made a pretty good recovery in the last 2 or 3 weeks, getting up close to resistance level now. Finance had broken out above that resistance level. It'll quite possibly come back and retest it. We've got some bank dividends coming up, so that'll weigh on the index as well. So we might possibly see a retest of that breakout zone. And this is the materials index, also just in the last week finally starting to show a little bit more upward momentum. But we're getting some very mixed data out of China at the moment. There's some very good industrial production numbers through the week and low inflation, but then we saw exports basically zero growth in exports in China, and that certainly weighed on our market a bit on Friday. So let's go now and have a look at gold, because I think there's certainly a major opportunity opening up here. Gold ended up gaining $18 on the week. It's still caught in this consolidation zone between 1550 and 1650. It's the 14th week in a row that we've been caught in that range. The HUI index is, I think the main takeaway here is that the HUI index is clearly an uptrend now, and that is really starting to have an impact on the gold stocks. Not so much here yet, but it will come. The GLD also moving a little bit higher. That's really the biggest gold ETF globally. Just needs to get a little bit higher, and if it can break 159, then I think we're into the next phase of this bull run in gold. Copper finished steady at 337 for the week, and oil a little stronger, finishing at 93. So let's have a look at those particular charts. We'll have a look at gold. This is gold on a weekly basis. You can see just continuing sideways, but there is a little bit of an upward drift. You can see just in the last 3 or 4 weeks, the lows of the week are getting higher and the ranges are getting smaller. So I wouldn't be at all surprised to see a breakout, which should be to the upside. That's gold on a daily chart, and silver on a daily chart as well. Also starting to make some good gains in. Sorry, that's not silver. That is rubbish. This is silver. It's in this little wedge pattern. I'm really expecting we're going to see a breakout and probably quite a fast move in silver if and when that does break out. Okay, this is the chart of copper. Hasn't really done a great deal in the last, basically since June. It's just been in this range between 330 and 350. But really, this is still profitable. It's still a buoyant price. It's down a little bit off its highs, but I think that's still showing that China and the global economy, the demand is still there, and things aren't as bad as some of the media are making out. Now, just looking at the overall strategic side of things, I think the most likely scenarios are to expect a bit of a pullback in the next week or so, and then we'll probably get a further run higher to certainly that 1422 resistance area, and possibly another 15 or 20 points above that, just to sucker a lot of people in. So I would not be trading the breakout above 1422. I think there's every chance that'll be a sucker breakout if it happens. I then expect perhaps a deeper correction into October, so expect a pullback in the next week, then a further advance, perhaps through September. Then we'll get a deeper correction of that move from the 4th of July. So we're talking somewhere around October, and I think we would then correct the larger move, and then as we typically do, a further advance into year end. And given that we've got US presidential elections in November, I'm sure they'll be doing everything they can to have the stock market looking fairly rosy. So the deeper correction in October, I'm still not expecting anything like we saw in 2010 or 2011. I think it'll be pretty mild by comparison. Now, in terms of the current trading, I think it's a pretty simple formula. You really want to be looking at buying the dips at the moment. So that's it for this week. See you next weekend. Cheers.